Investing is one of the most important money decisions you'll ever make. It's also one of the most confusing. The vast majority of Americans are invested in stock market funds, but investing your money isn't a simple binary decision. Investing involves many factors, ranging from your personal financial situation to climate change and social issues. Understanding those factors is important for anyone looking to invest their money responsibly and prudently. Investing responsibly means putting your money toward investments that will grow over time and provide a higher return than what you pay in fees or taxes. Investing responsibly also means limiting how much risk you take with your money, as too much risk can result in losing everything if you don't do anything else to manage risk. Sustainable investing takes both of these things into consideration. It helps investors make well-informed investment decisions that support a stable, growing economy while minimizing risks associated with them, such as the danger of losing capital if an organization goes out of business. In this article, we explain why sustainable investing is so important and how it affects people who invest their money responsibly. Why is investing important? Investing is important for a number of reasons. First, investing money in the stock market helps people build their net worth and establish personal wealth. It also provides an opportunity to earn a return on your investments and generate additional income. Beyond these purposes, investing is important because it ensures that future generations have an appropriate financial base to live off of. Additionally, investing responsibly helps ensure that we leave the world in a better place than when we entered it. Investing responsibly helps protect our planet from climate change by putting our money toward organizations with sustainable practices and initiatives that help lower carbon emissions. Sustainable investing also helps prevent social issues like pollution by placing capital into companies and organizations committed to environmental sustainability and social justice. This means that sustainable investors can put their capital toward organizations that help prevent environmental degradation and provide funding for people of color, low-income communities, women, or other underrepresented groups instead of just corporations or institutions that prioritize shareholders above all else. Investing responsibly. Sustainable investing is important for people who invest responsibly. Investing responsibly means limiting how much risk you take with your money and investing your money in a way that provides a higher return than what you pay in fees or taxes. It also means putting your investments toward organizations and companies that are not only providing financial stability but have the potential to grow into something even more lucrative over time. Investors should always look at both the short and long-term effects of their investment decisions. If an investor decides to buy stock in a company, they may be looking at the company's financial performance over the next 6 months or year, but they must also consider how sustainable the company is and how it will affect society as a whole over the next 3 decades. Sustaining investing. Sustainable investing is essential for a healthy economy. The U.S. economy is largely driven by consumer spending, which makes up about 70% of the U.S. GDP, according to Investopedia's definition. The majority of this money comes from consumers with disposable income, people who have at least $40,000 in annual earnings. People with enough disposable income have the option to spend or save it, and in recent years, Americans seem to be opting more towards saving than spending. One of the reasons this is happening is because a lot of people are concerned about social and environmental issues, including climate change and global warming. These issues contribute to why investing has become more popular among American consumers. They want to make responsible investments that they feel comfortable putting their hard-earned money towards while also helping their communities and contributing to an economically sustainable future. The benefits of sustainable investing. Sustainable investing is important for both investors and for society. Investors are able to make well-informed decisions about whether an investment is worth their time, money, and risk. In doing so, they help grow the economy by supporting a stable environment. Sustainable investors also help to minimize risk. If an organization goes out of business, sustainable investors can still coax out a profit from their investments through long-term asset allocation strategies. Sustainable investing is also crucial because it helps develop the financial industry as a whole. In order to attract the best and brightest minds in finance, organizations need to focus on sustainability. The industry needs people who are looking at where society will go in the future, not just focusing on short-term gains that have already been made by spending enormous amounts of money on advertising. In this article, we've explained why sustainable investing is important, not only for individuals who invest responsibly but also for society as a whole. What are the benefits of sustainable investing? Sustainable investing can offer major benefits. For example, sustainable investments can offer a higher return than comparable investments. Sustainable investments also tend to have lower fees than non-sustainable ones, which means that you'll be able to invest your money more easily and grow your wealth faster. Sustainable investors are informed about the long-term effects of their investments, so they know what to expect in the future. They also manage the risk associated with their investments, meaning that sustainable investors are less likely to lose their capital if an organization goes out of business or gets burned by market volatility. With sustainability comes responsibility. When you invest responsibly, you take some burden off of society and put it on yourself as an investor. This is because businesses that invest responsibly will end up paying fewer taxes and fees on every dollar they earn in exchange for working in environmentally friendly ways, avoiding waste and social issues like human rights violations or factory conditions. These companies usually have higher payouts from investors with successful returns because of this approach to investing. Sustainable investing is important for people who have been tasked with making financial decisions for themselves or for those who plan on doing so in the future. In fact, 77% say they're interested in learning more about sustainable investing in 2022. How do you achieve sustainable investing? There are many ways to achieve sustainable investing. One way is to invest in stocks that represent companies with a strong commitment to social and environmental responsibility. Another way is to invest in companies that are involved in environmentally responsible science, technology, engineering, and math, STEM, fields and fund the education of those students who do not have the financial means to attend college. If you're looking for a more conservative investment strategy, you can diversify your investments across multiple types of stocks and bonds. Organizations like the United Nations Principles for Responsible Investment, UNPRI, offer guidance for investors who want to adopt sustainable investment strategies. They provide advice on how investors can make sure that their investments help protect people and the planet while still achieving desired returns on their investments. This article explains why it is important for investors to adopt sustainable investing strategies, how they can do so responsibly, and how they should manage risk as they invest responsibly. Conclusion: sustainable investing is an investment strategy that protects the environment and the people that depend on the earth. It can be achieved by investing in companies that uphold sustainable practices and environmentally friendly products while remaining profitable. Investing in sustainable companies can also make a lasting impact on the world.